Good afternoon, everyone. I hope you can hear me. Please give me a thumbs up just to confirm that you can hear me. Thank you. Thank you for the thumbs up. My name is Belinda, and I will be your moderator in today's webinar. And we'll just give everyone 5 more minutes to join in, and then we'll get started. So stick around. We are starting in the next 5 minutes. Thank you. Okay, fantastic. Good day, everyone. I hope you're all doing well. My name is Belinda, and I will be your host and moderator for the day. Thank you so much for taking the time to join today's webinar, 2026 Tax Compliance Reset, Preparing Your Business for the New Era of FRS, now NRS, MBS Compliance. Welcome to today's webinar hosted by Digitax. And just to give you a brief introduction about who we are and take you through the program for today. So Digitax is a Pan-African e-invoicing solutions provider, and we're authorized across various markets to provide tax compliance software. And so with our platform, Digitax, you can start issuing NRS approved e-invoices instantly through our One in Town dashboard, versatile APIs, and we also have bulk upload tools that allow you to upload multiple sales and items and even thousands while integrations run in the background. Our mission is to make invoicing easy, simple, fast, and less taxing, and that's what we pride ourselves in. So today's webinar, I will be your host, Belinda, and we're also joined by Mr. Ajibola Sogunro. I hope I have not butchered your name. He's a partner at Fovis Mazars, yes, and he brings deep expertise in tax advisory, compliance, restructuring, and international tax. And he's worked with a wide range of clients across sectors like financial services, manufacturing, oil and gas, and telecoms. And he's also a seasoned speaker on tax and fiscal matters. And we're excited to have him share his insights with us today. We also have our country director, Mr. Olumide Akinsola, our country director in Nigeria, who's also going to be part of today's session. So without much further ado, I'm going to invite Olumide to invite our guest, and we can take it up from there.
Thank you very much, Belinda. Please confirm that I'm audible.
Yes, you are.
Excellent. Hi, everyone. Thank you for joining this session. I have the honor of bringing up Mr. Shoguro to come and have a very quick presentation with us to talk through how these new tax policies and all the provisions in the new tax laws will affect us as a business. Thank you for joining again. Please, if your friends are not here or there's people that you think they need to be in this session, you need to send them the link right now so that they can join, because Mr. Shoguro is very well seasoned in this topic and is able to also answer all your questions and also provide clarity to all your confusions that you might have regarding this new policy that's kicking off, or that's kicked off on the January 1st. I will come up much later to talk through what we do, but please allow me. It is my honor to bring up Mr. Shoguro right now to come and talk to us about this new tax reforms. Mr. Shoguro, thank you very much for joining us. Welcome to Digitax webinar.
Thank you. Good afternoon, everyone. Good afternoon, Lumide and Belinda. Please confirm you can hear me before I speak further.
Yes, we can hear you.
Okay, great. Okay, so from the agenda, from the program, I can say 10 minutes. Can I share my screen and just quickly run through my slide in 10 minutes?
Sorry, I didn't realize that I was mute. Mr. Shoguro, yes, you can take, I think you can take about 30 minutes based on the agenda that we have. So please feel free to take a bit more time than the 10 minutes that you have. But please go ahead and share your screen so that we can talk, follow you through the presentation. Thank you, sir.
Okay, thanks for that update. I'm not sure I'm enabled to share screen from here. Hello.
Please try now. I think I have just made you a presenter. Belinda, is there something that needs to happen for him to be able to share?
He is now a presenter. You can try now.
Okay.
Excellent.
Two minutes.
I think it's still coming up. We can't see your screen yet.
Yes, I've not started sharing yet. Just hold on. Just a minute,
Okay.
please.
Okay.
It's coming up. Please confirm once you're able to see so that I can start.
All right. It's up now. We can see it now. Loud, very clearly.
Oh, great.
Yes, sir.
Okay, so not this. I'm not showing the right one. Apologies, please. Because I guess it's coming up now. Please, can you see my screen?
Yes, we can see your screen now.
Okay.
But we are only seeing we are seeing this meeting so you need to switch to the right tab. Sorry, these things take a bit of time.
Just 1 more minute. 1 more minute. You guys have closed. Okay, final trial. It should be up by now.
It's coming up.
Okay.
Yes, it is up now.
Okay, great. So
yes.
I think we can move very, very quickly. I think with these delays, I must have spent 2 to 5 minutes out of my time. So I'll try as much as possible to be fast and also to ensure that I capture the crucial aspect of this presentation. So this morning, or this afternoon rather, we are looking at 2026 tax reforms and compliance, preparing your business for the new tax regime. Without taking too much of our time, we'll look at things around overview of the Nigerian tax reform. We'll look at roadmap for implementation, snapshot of the key provisions, general implications for taxpayers, both individuals and corporate entities, implementation strategies, compliance and administrative procedures, then we'll conclude. Okay, tax reform in Nigeria is no longer a news. The current administration started this reform long ago, immediately from inception in 2023 by setting up a committee to look into our existing tax system and coming up with a better way on how to upgrade and how to how to upgrade and how to transform the tax system. So what we currently have from 1st of January 2026 is the upgraded or the transformed tax system. Yes, I'm sure most of us are aware that there were some discussions below around the inclusion of certain things in the gazetted act, but despite that, implementation date has not been confirmed otherwise. So as it stands, we still have 1st of January 2026 as the date of implementation. So what that means to you and I is that we've started operating in the new tax era, except otherwise confirmed. So what do you need to know about the reforms? I don't want to talk about what you need to know because I want to assume that you know already, because we are in the implementation phase. So implementation has started some days ago. So the assumption is that some of those things we have gotten information about them, even though I would still speak to them, but I don't want to stress myself speaking about those changes. But basically, let's look at how those changes are meant to be implemented, or how we are meant to configure our compliance system to actually align with the new era. So I will be nice if I speak on the implementation requirement without speaking to some of the tax laws. So at the moment, the Nigerian tax system is administered from the basis of four tax laws, or four major tax laws, which are the Nigerian Tax Act, Nigerian Tax Administration Act, Nigerian Revenue Service Establishment Act, General Revenue Board of Nigeria Establishment Act. So in all these acts or legislations capture the taxes that you and I are to pay, either from the perspective of individual, corporate entities, trustees, partnership, or what have we. This act also have one of it that basically focus on administration, and that speaks volume about what the Nigerian Revenue Service need to do, what the State Internal Revenue Service to do. That law, which is the Nigerian Tax Administration Act, also looks at the administrative procedures and how to administer taxes, collection, enforcement, returns filing, and also application by taxpayers. The third one is the Nigerian Revenue Service Act, and that basically deals with the transformation and upgrading of the Federal Inland Revenue Service. So prior to the 1st of January this month, of course, we used to know of the FRS, and the general perception of the FRS was that it was an agency responsible for the collection of revenue on behalf of the federal government, and which is actually not true, or which is incorrect. The Federal Inland Revenue Service, or the defunct FRS, was charged or has a mandate of collection of revenue on behalf of the Federation. And that was why VAT collected were actually distributed among the three tiers of government, just to let you know that FRS was not existing as an agent of revenue collection for federal government. Rather, it was existing as an revenue collection agent for the Federation. So the NRS, of course, has been able to address some of those things. And then going forward, in no distant time from now, we'll start seeing that most of the parastatals or agencies of government, of the federal government, that have maybe some revenue collection as part of their responsibility, some of those things will start fizzling out as time goes on. One of them is the Nigerian Custom and a few others. The last one is the Joint Revenue Board Establishment Act. And this particular act has three major things contained in it. One is the establishment of the Tax Appeal Tribunal. Second one is the establishment of the Office of the Tax Ombuds. And the third one is the Joint Revenue Board itself. Joint Revenue Board basically will be responsible for making recommendations to the federal government on taxes, maybe in terms of reviewing the rates, adjusting the rates. Will also be responsible for managing disputes among the various tax authorities, either state, federal, the Nigerian Revenue Service, and at the same time, the local government revenue committee. Don't forget, local government also have their own revenue collection agents, so not just state and then the federal government from the perspective of Nigerian revenue. So we also have the Office of the Tax Ombuds, who will be responsible for looking at cases of disputes or conflict between taxpayers and the tax authorities. The Tax Appeal Tribunal, of course, has been in existence even prior to the tax reform, but one major changes about the Tax Appeal Tribunal is the fact that it's no longer an agent of the Federal Inland Revenue Service, because prior to 1st of January 2026, Tax Appeal Tribunal used to be an item under the Federal Inland Revenue Service Establishment Act. I think I've spent so much time on giving an overview of the tax reform. Slide 2 is also talking about the overview, but just to focus on the core principles of the tax reform, one of them is simplified tax provisions. Prior to now, we have provisions that are difficult or complex to understand. So one of the major objectives of the reform is basically to have our tax laws written in a language that is easily understood by you and I. Number next is the harmonization of various tax legislations. Prior to now, we had so many tax legislation. To still be referring to some of them, because in cases where the relevant tax authority to review the books of taxpayers for previous years, you and I will agree that we'll still be looking into some of those laws. But at the moment, those laws have been harmonized in such a way that we now have 4 major tax laws for the purpose of a redefined tax system in Nigeria. Taxpayers focus, we look at it from the perspective of how some of these things have been reclassified. When you look at maybe complaints, when you look at individual, when you also look at that singular act of changing the narrative from the perspective of taxing seed rather than fruit, taxing poverty rather than prosperity. So these are some of the things that we'll be able to know that the reform is taxpayers focused. Data-driven policy. So one major core principle about the reform is also that this is the time that the relevant tax authority will rely mostly on data, because data is basically what they will use to provide taxpayers information, and then with that, they are able to do some alignment between what you earn as a taxpayer and what you pay as taxes. Modern administration, I've spoken at length on the Nigerian Revenue Service, that will now have a total overhauling in terms of upgrading and transformation. And we also have the Joint Revenue Board, because what we used to have before now was the Joint Tax Board, JTB. So now we have the JRB, and you discover that even when we had the JTB, the tax authorities were not working as one. They have quite a lot of divergence of views, actions, and the way they do things. But the tax reform has been able to simplify all these aspects. Reduction of applicable taxes to single digits. Prior to now, hardly could you mention or state in categorical terms the number of taxes a business should pay. But now we have single digit between 1 and 9 as taxes to be paid by a taxpayer. Conformity with global practices. We have some of the old tax laws that were written long ago. For example, the Stamp Duties Act was written maybe in the 1920s or 1930s. So just imagine that in the 21st century, we are still referring to acts or laws written so many years ago. That was just to mention just a few of some of those acts. When you also look at the Personal Income Tax Act, aside from the changes that came as a result of the Finance Act, the last time the Personal Income Tax Act was amended was in 2011. So these are some of these. When you look at 2011 and we are in 21st century, you discover that it's high time that our laws should have been rewritten. So, but we are glad we are in the new era where all these laws have been rewritten. So on the screen is basically giving us a summary of the provisions that we have in the tax reform, acts that were repealed, and acts that were amended, and subsidiary legislations that were repealed. Okay, since we are discussing how to prepare your business for the new era, and so that was why I said we'll just talk less of the changes, because we want to believe that we'll familiarize ourselves with the changes, but I'll still talk about the changes. So roadmap for implementation. How do you get ready for implementation? How do you prepare your business, either from a corporate perspective or from individual perspective? The first thing you need to do is it's important you even understand the changes that we are talking about. Everything around the tax reform is basically changes to the tax laws, harmonization of the tax law, changes to some provisions. So for you to prepare for implementation, we're already we are in the implementation period. So you need to understand those key changes, or even all the changes. But over time, all the changes, but at the moment, maybe the key changes that may have significant impact on you as an individual or on your business. The next phase, having understood the key changes, is basically to perform impact assessment. So from time to time, you need to perform impact assessment of how those changes will impact your organizations. We'll check some of those impacts as we speak. Apologies, I also know that I'm a bit rushing, just to ensure that I speak within the 30 minutes. So conduct impact assessment. Next one will be seek expert guidance where necessary. When you conduct impact assessment, and then you need to redesign your compliance framework, either from VAT perspective, from your payroll, from your corporate income tax, where you don't have a consultant. Of course, you have to have the redesigned compliance framework. And some of these things may require you seeking the support of experts. The other one that is next to it will be to develop action plan to minimize possible risk or your exposure. Because if you've really understood the changes introduced and you've conducted an impact assessment, sought expert support where necessary, then you'll be able to know if you've been able to address all the relevant areas of exposure. You might also need to do some capacity building, as we are doing at this moment. Of course, I want to believe that some of us who are on this call, this not in the first session or webinar we'll be listening to as far as the tax reform is concerned. So most importantly, it's also that for organizations, they also have to do capacity building for their employees, for those who are maybe HR, those who are finance analysts, those who are working in the finance team will be responsible for account payable and account receivable from time to time, because the essence of this reform is that it trickles down into organizations, operations, and activities. So that is why finance team and every other person that are key in the chain of operations are expected to have the right capacity. Then you need to review your compliance strategies, and compliance strategies go with your compliance framework. Stage 3 talks about your compliance framework. You have to redesign. When you redesign, stage 5 says, or step 5 says, you need to review your compliance strategies to be sure that every areas of possible risk have been addressed. And finally, we'll now be to carry out self-check to ascertain your level of preparedness. So all these steps are very necessary for companies or individuals to be ready for implementation. So that is basically what how to prepare talks about. Snapshot of some of the key provisions of the reforms. I will just run through these So some of the provisions in the reforms, we have instances where the categorization of businesses have been redefined. So prior to January, we used to have three categories of businesses. So small, medium, and then large, taxed at different rates. But from now, under the new era, we now have just two categories of businesses, small and others. Small businesses are basically businesses or companies whose turnover do not exceed 100 million. From the screen, I'm sure you see 50 million and you also see 100 million, but we have it highlighted because of the provisions in two different tax laws. One is the Nigerian Tax Act that talks about 50 million, while the other one is the Nigerian Tax Administration Act that talks about 100 million. But we've listened to quite a lot of interviews by the committee who maintained that 100 million was the focus. So, but let's see how it goes. Maybe in the course of this implementation, the Nigerian Revenue Service, which is responsible for administering corporate taxes and other related taxes, will issue circulars that will address that. But it's important to know that circulars cannot rewrite the provisions of the law. So small businesses are basically businesses or companies whose turnover do not exceed 100 million. So let's work with 100 million, and whose total fixed assets do not exceed 250 million. We've noticed that people are fixated on revenue aspect. So small businesses are not only defined from the revenue aspect, they are also defined from the total fixed assets. So, and these two conditions are mutually exclusive. The revenue must not exceed 100 million, and the total fixed asset at the same time must not exceed 250 million. Maybe one other thing to say on this categorization, particularly on small business, is that business enterprises are not classified as small business. Small business here is basically talking about corporate entities, that is private companies that are limited by shares, whose turnover is below 100 million and whose total fixed asset is below 250 million. Please, let's take that. It's very key. Now, another one is so other companies are basically companies reporting turnover above 100 million and above, and they are basically expected to pay tax at 30%. We have development levy, which is 4% of accessible profit for taxable companies, particularly companies whose turnover over 100 million, and at the same time, companies that are not non-resident companies are exempted, and small businesses are also exempted from the development levy. So we have a chain of expense and deductibility rule. So one of them is your expense, of course, if they are deductible in terms of VAT has been paid on them for those expenses to be tax deductible. We have deductions around research and development to the tune of just 5% of the turnover of businesses. So where businesses have actually incurred cost on research and development, they are also allowed to claim those expenses, provided they do not exceed 5% of their turnover. So we have deductible donations as well. Donations have also been reclassified. Unlike before, we discovered that there were a list of approved bodies to which taxpayers could actually donate, and that basically confined taxpayers just to work within the list. But now we have the list has been remodified in such a way that you just have maybe public institutions, you have statutory bodies, you have maybe contributions for donations for a disaster and what have you. So, and then you also have charitable or ecclesiastic bodies. So you discover that this is a bit open. Instead of having the names of institutions or institute mentioned or written in the tax law. So that means aside from that particular institute or institutions that have been mentioned, you can hardly donate to any other person. But the reforms has actually addressed all these aspects. We also have minimum effective tax rate, basically for Nigerian companies whose turnover 50 billion and above, and also for multinational constituent entity or subsidiaries of multinational entities whose consolidated turnover is 150 million euros and above. So they also have the minimum effective tax rate. So I have some analysis in the course of this presentation. So maybe just to wait until that. So we have international tax provisions. So international tax provisions is this is applicable to cases of non-resident persons doing business in Nigeria. Section 17 of the Nigerian Tax Act actually address how these persons how these persons are to be administered for tax purposes, in terms of maybe from the perspective of having a significant economic presence in Nigeria, or from the perspective of having permanent establishment. So that basically defines how non-resident persons are taxed. And a concept of minimum tax has also been introduced. One has to do with the withholding tax already suffer for doing business in Nigeria, and the other one is 4% of minimum of 4% of the income generated or realized from Nigeria. It's important to know that minimum effective tax rate is also applicable in cases where Nigerian entities have foreign subsidiaries. So if a Nigerian company has foreign subsidiaries, and those subsidiaries also pay taxes in the jurisdiction where they are resident, and the taxes paid are not up to the minimum effective tax rate, they are expected to pay minimum effective tax here in Nigeria. Chargeable gain has to do with disposal of asset, properties, and every other asset listed within the tax law. So when a company disposes of its asset, the gain from that asset is expected to be treated alongside every other incomes that such company or profit must have made in the course of the year. And this is also applicable to individuals, except for gains or properties that are exempt from taxation. So unlike before, when you had gains on disposal of assets, you will be taxed at 10%, either companies or individual. But now that is no longer applicable. So what is applicable is you will be taxed alongside your income, either individual or corporate. Because of our time, taxation of free zone entities operating within the free trade zone, they will also have some changes in the tax law that affects the way they are taxed going forward. You and I know that free trade zone entities and enterprises are not taxable. They are not taxed as long as they operate within the zone. However, if they transact with people outside the zone, maybe they sold or they render services to people outside the zone which do not constitute export, they will be taxed accordingly. So the new provision of the tax reform has adjusted their transactional activities in such a way that when they transact, when they sell, or when they supply to the custom territory that is not export, and those supplies constitute 25% of their transaction, 25% of their sales in a year, more 25% or more, then they become taxed on those aspects that relates to custom territory. So, for example, a free trade zone enterprise operates within the zone but renders supplies or renders services to people within the custom territory. And custom territory is basically maybe you're transacting with people in Nigeria, because when you operate in the zone is seen as an export zone. So whatever you do there is meant to be exported. So in the case where you sell to, where you transact with people in Nigeria, so those transactions will be taxed accordingly, provided it's more than 25% of your total sales in a year. And going forward, maybe by way of executive order from Mr. President, the activities of free zone might become fully taxable once they transact, once they sell or they render supply to the custom territory. But for now, they are only taxable if their transaction with the custom territory is more than 25%. But if it's still within or below 25%, the below 25%, they won't still be taxable. But the law provides that the president may issue an order which will require that going forward, irrespective of the percentage of sales, supplies, or transactions with custom territories, free trade zones enterprises will become taxable. That is where they transact with custom territory. Okay? So value-added tax, the rate of value-added tax remains the same, nothing has changed. But the major thing is that we have reclassification of items. So some items have been moved from zero-rated to exempt, while some items have been moved from exempt to zero-rated. So most items that sit in the bucket of exempt have now been moved to zero-rated, and those are basically supplies and basic food items and what have you, because that is basically what you and I or most people deal on. And you discover that when those items were classified as VAT exempt, the complaints dealing on those items would not claim input VAT because they are exempt. So if you suffer VAT and exempt, you just expense it. So they've now been moved to zero-rated, and what zero-rated simply means is that when you suffer any VAT in your transaction, you are able to claim refund. So that is the distinguishing factor between zero-rated and exempt. Now, another new thing that happens under VAT is the fact that either you are a service industry or you are a manufacturing entity, you could actually claim input VAT on all your activities, provided you deal on vatable supply. So if you do not charge output VAT, then there's no way you could actually claim input VAT. But where you deal on output VAT, so where you actually charge VAT on your supplies, you could actually claim every input VAT that you have suffered, either from overhead, either from services, or from purchase of fixed assets. Now, VAT credit and refund. So where your input VAT exceeds your output VAT, it is taken as VAT credit. And what that means is that in subsequent months, you could use it to defray some of your output VAT. So where you have more output VAT. But another thing around the reform is that aside from having that credit and just using it to set up your output VAT over time, you can now claim refund. And when you're applying for refund, of course, all things being equal, under 30 days, you should get your refund. And once you get your refund for VAT only, it can be used to defray other relevant taxes, either stamp duties, either income tax, even VAT itself. But even you should also be able to use it for withholding tax. That is where you've actually defaulted in maybe deducting withholding taxes. Of course, we know that withholding tax is not a tax type, but in a case where you have liability from withholding tax, you could actually use it as a network. So that is basically the new thing around VAT reform. So another thing is that where you also have input VAT, you can claim the input VAT can only stand within 5 years. So what that means, if you have input VAT, ensure that they are properly tracked in such a way that where you have excess that you might not be able to utilize within 5 years, just apply for refund. Else, you discover that input VAT automatically crystallizes and you tend to lose it. We also have VAT fiscalization. I'm sure Lumide will speak at length on that in terms of deployment of electronic fiscal system for the purpose of recording and also issuing receipt. That is the e-invoicing aspect. I'll allow him to take that. So we have penalties for default. So I have a slide that talks about that in the video. So I think most of us, this will be very interesting to us. Before I move, please, can you confirm you can still hear me and then I'm making sense to you?
I can still hear you, sir. I'm sure everyone else can. Thumbs up if you can. Please, thank you. Yes.
Okay, great. So that I'm not just speaking without having people following. We have some practical analysis here. So I'm sure when we get there, you tend to understand most of this thing better. So I find it difficult to still be speaking about the changes in 2026, but whether we like it or not, we'll still be speaking to it. So, but this time around, I think one thing we've changed, we've actually done from our own practice now to bring some compliance framework, what is expected, how things are to be done. We've tried to keep that into our slide just to make sense for people. So taxation of individual, I think I will just pick two things here. The rate, the graduated rate has actually been revised. So what we used to have in the past. So we'll say in the past, but it's still obtainable. And when I said it's still obtainable, I'm sure some people will be wondering, what is this man saying? It's still obtainable because if tax authorities to tax or review last year, review 2 years ago, review 3 years ago, they won't use the tax reform. They will still use the old laws. So the old laws will still be useful in the next, be useful in about 6 years, because tax authority can still audit or do compliance check or investigation for past 6 years. So if your organization has not been audited in the last 6 years, expect that the old laws is still applicable to you. It's still applicable to you for any time that the tax authority comes. But that time that they may come, if it is 6 years after 2026, then it's no longer relevant. So please, let's just have this at the back of our mind. So the graduated rate has been revised from 7 to 24, is now 0 to 25. And what that means is that 0%, so where you're chargeable for the chargeable income of 800,000, they will be taxed at 0%. Chargeable income, I've listened to quite a lot of conversation and they are saying income that is 800. There's no income that is 800. Either you earn more than 800 or you earn 1 million or you earn 20 million. The fact remains that the 800,000 of your chargeable income will be taxed at 0%. I repeat, 800,000 of your chargeable income will be taxed at 0%. Lucky you, if your chargeable income is not up to 800,000, you have nothing to pay. If your chargeable income is above 800,000, the 800,000 of it will be at 0%. The remainder will be at various rates, starting from 15, 19, 21, 23, 25. So it goes that way. So graduated rates. I'm sure we got this. Did we? Can we confirm that again?
Yes, we are still with you, sir.
Okay.
I am. Yes.
Okay. So another thing around taxation of individual is the benefit in kind aspect. So the benefit in kind aspect has been restructured in such a way that, so prior to January 2026, so if your employer pays your rent or you live in accommodation provided by your employer, two things. One, the rent paid by the employer or the rate of that accommodation will be added to your emolument and will be taken as an additional income in your hand. That is the benefit in kind. But from now, it's no longer that way. So instead of bringing the full amount of the income of the rent paid on your behalf or the rental value of the accommodation provided by your employer, so what will be added to your emolument will be pegged at or will be restricted to 20% of your gross emolument. So let me just paint some scenario. So your employer pays a rent of 5 million, depending on where you stay, or provides an accommodation that whose rate is 5 million. So I'm using the same thing so that it will be much understandable for us. And your total emolument in a year is 20 million. I think there's a perfect example. So if it's 20 million, so the reform says no, don't take 5 million, which was paid as rent, or which is the rental value of the accommodation provided by the employer as an additional income to the employee, but rather subject that amount to 20% of the gross emolument. So your gross emolument, like I said, if you earn 20 million per annum, 20% of 20 million is 4 million. Hello, is that correct? 4 million. Is that correct, sir? Can somebody confirm that before I move further?
Yes, sir. Correct.
So 4 million. So instead of adding 5 million to your emolument, you only add 4 million. That's what that means. So then we also have relief around rent. So where you pay rent, you are an employee, you paid rent, and then you are willing to share information about the rent that you have paid. One, the rental agreement, the receipt, the details of your landlord or the recipient of the rent. You are willing to share all these things. Then you also have a relief around rent, which is 500,000 or 20% of the rent paid. 500,000 or 20% of the rent paid. So, for example, you paid 5 million as rent, depending on where you stay. So let's assume you stay in maybe Ikoyi, Ikeja, GRA, or maybe a few other places like that. So and you pay 5 million as rent. Of course, before you pay 5 million as rent, you just know that you're a big boy. So 5 million as rent, you have a relief if you are willing to share the relevant information I talked about. So the employer is meant to communicate to you. If you're an employer here, you are meant to communicate to your employees. If you're an employee here, your employer is meant to communicate to you. So what does that mean? You have, so 20% of your 5 million is 1 million, but you can only get 500,000. So lower of 500,000 or 20% of your rental value is taken as a relief. Okay, I think my time is fast spent. This is basically general matters that we can want to look at some of the expectation in terms of registration. So if you have not registered before, as a taxpayer, you have about 4 obligations. Those 4 obligations are summarized as follows: 1, obligation to register, obligation to obtain TIN, obligation to file returns, obligation to remit taxes. So either you have taxes to remit or not. If you are a taxable person, who is a taxable person? A taxable person is someone that earns income. If you earn income, you are a taxable person and you have tax obligation. I'm breaking this thing down for us to understand. It's also a way to prepare for the new era. If you're a taxable person, you have tax obligation, and that means that you need to register, you need to obtain TIN or taxpayer ID as the case may be, you need to file returns, you need to pay relevant tax. That is basically what this slide is talking about. And the one in terms of the public release from the Joint Revenue Board talks about the issue of tax ID, and yes, the issue of tax ID, how to go about it. And I think there was also one circular that was released that talks about the influence into individuals or into a bank account. Okay, I think we can just take time to read this all because of my time. So the reforms in summary, I think this area will be of interest to us, and I will just try to find a way to also summarize, since we also call it the reforms in summary. What to expect during implementation of taxation of company. So I think this is a bit legible so we can see. So this is what we should expect if we are here representing our companies, and either our company is the one handling its tax affairs, particularly corporate tax, or we have consultant handling them for us. We need to pay attention to this. It's also part of the preparation requirement. So what has changed? I'll just try and come to somewhere around there. Somewhere around there, there is chargeable gain. This is a typical tax computation for company. So there's chargeable gain here. And what that means is your gain from disposal of assets comes here. And when it comes here, 2 things to note about chargeable gains. When you dispose an asset and the asset has actually enjoyed capital allowance, the only thing you will adjust in arriving at the gain is the tax written down value. That is the unclaimed capital allowance on that asset. I repeat, if you are a company and then you dispose of an asset in the course of the year, the gain that will be taxed will just be the difference between the sales proceeds and the tax written down value of the asset, where the asset has actually claimed or has been enjoying capital allowance over the years. For an asset for an item that has never enjoyed capital allowance, the chargeable gain will be the sales proceed minus the acquisition cost and other costs incidental to disposal. I'm sure maybe in the course of question I can explain more some of this. So we have that here, and then that's move. So another thing we also need to pay attention here is that we have the development level, which I talked about, is 4% of your accessible profit. So what has changed here? You discover that your accessible profit, relevant profit adjustment, either hard or less, you have your accessible profit. So 4% of this gives you the development level. So in all of this, you discover that chargeable gain has been introduced for you to determine, to arrive at your accessible profit, and at the same time the development level. So come down to chargeable income. Chargeable income, nothing has changed because we're just bringing, you recognize your loss relief if you have any losses, unrecouped losses from previous years, which you adjust from your accessible profit, and you also recognize your capital allowance, which brings you to the chargeable profit. 30% of your chargeable profit becomes your tax payable. Ladies and gentlemen, the addition of your development levy and corporate income tax for companies that do not operate in oil and gas, the addition of these two will give you the total cover taxes. I'm using total cover taxes because of the minimum effective tax rate or minimum effective tax. Don't forget, while I was at the beginning of this presentation, I think slide 3 or 4, I talked about minimum effective tax rate, and that is basically to ensure that two categories of companies whose turnover is above 550 billion in a year, or multinationals or subsidiaries of multinationals whose turnover is 750 million euros and above. So you do some tests here, and so you've gotten your total cover taxes, which is the addition of your development levy and the income tax. Then you also determine your minimum effective tax. So there may be need to pay a top-up if B is greater than A. What is B? B is the minimum effective tax, and A is the total cover taxes. Now, this other part is basically talking about how you arrive at the minimum effective tax rate. So this is the computation of the minimum effective tax rate. Minimum effective tax rate becomes necessary where two conditions: minimum multinational entity group or over 50 billion turnover. Then you have this. So over 50 billion turnover in the case of a Nigerian entity, and in the case of a subsidiary of a multinational entity, 750 million euros and above. So you do this test. If the threshold is met, yes. So once you say yes, so that means you have all these things to do. You have all these relevant things to act on in terms of the computation. So when you do your computation, you do the analysis, and you just bring it here and check with the total taxes, check which is higher. If your minimum effective tax is higher than your total cover taxes, you pay the difference, which is the top up. So this is basically a typical payee computation template. So what has changed? We discovered that I talked about two things while speaking about taxation in the video. I talked about the rent relief allowance. I also talked about the rent paid by the employer or accommodation provided by the employer. So when you look at what we have here, you discover that we have the assumed rent paid by the employer. We have the restricted amount, so which must not be higher than 20% of your, restriction, so restricted. So lower of the rent paid or 20% of the gross emolument, lower of. Then when you also come here, we have the rent paid by the employees. So where the employees are willing to disclose this relevant information. So once they disclose relevant information and provide the relevant documentation, you can actually claim the relief. Okay, as I round off, what to expect during implementation for VAT, what has changed. So I think this first part, vertical turnover, VAT at 7.5%, nothing has changed. So let's look at this other part that is highlighted in gray. So you see less input VAT brought forward. So for service industry, you don't have brought forward because the introduction of claiming input VAT on overhead services and fixed asset commenced from 1st of January 2026. And that is why we've highlighted this place yellow, letting you know that brought forward is not applicable to everyone. It's only applicable to taxpayers who have input VAT as at 31st December 2025, who have claimable, let me use the word claimable input VAT. So you see all the relevant amount of VAT on local purchases, including fixed asset and overhead, VAT on imported purchases, VAT on services total. Then you restrict because you can only claim input VAT that you will use for the purpose of consumption or that are used for the purpose of taxable supply. So you have to restrict if you have input VAT that you suffered on purchases that are not meant for consumption or that are not meant for taxable supplies. You have to take all these things out. Then you have your input VAT claimable. At the end of the day, is that you have VAT payable and you have VAT credit, which leads to refund. These are basically implementation strategies, which I think I've spoken about them in the course of the presentation. So complaints have been classified into two. You see what we have in the implementation strategy. What do you need to do? You need to track your transaction to see when you move from small business to other companies. Controller for the same thing, then also minimum effective tax rate. You need to check when your turnover is 50 billion for a Nigerian entity, and for a subsidiary of a multinational entity, you need to check when your turnover is 750 million euros and above. Another one is also where you have a foreign subsidiaries. You also need to check. So that has nothing to do with the turnover threshold. When you have a foreign subsidiary and what they've paid is not up to the minimum effective tax rate of 15%, you also need to check that. We also have this around chargeable gain, which I've also discussed individual taxes. We also need to, of course, you have to be mindful of having to update your payroll or your payee computation template based on what I've explained in previous slide. These are some. This is just an extract of some of those things you should expect when there are failures. So let me just speak to failure to register 50,000 in the first month, then in the subsequent month 24,000. Taxpayers, you and I also have responsibility to deal with taxable persons, and that is where you fail to where you award contract to a registered person. There's also a penalty. So this is basically just to ensure that every one of us, we are fully involved in this compliance, in the compliance with the new tax regime or with the tax reform. There's an aspect that talks about the e-invoicing. So failure to use fiscalization system, of course, has penalty, and at the same time, there's also one which is not included here, also has a penalty where, okay, I think failure to make attribution and what have you. Ladies and gentlemen, I know I've spent over 30 minutes trying to speak to this. So I conclude by saying that as businesses, you must review your operations and activities from tax perspective. You redefine your tax compliance strategy and upskill properly to remain compliant in this new dispensation. You can't be compliant, you can't be relevant if you didn't do all these things. Thank you very much.
Thank you very much, sir. Thank you so very much. We are very excited. Thank you for the time that it's taken. This was very detailed. Even me, I'm learning about a number of things that I was not really aware of before. I think I've been very narrowly focused on the e-invoicing bits prior to now. So now I'm realizing that, wow, even me, I'm going to be paying some more taxes, which I have to go and think about how to set up for some of those things. So thank you very much, sir, for taking the time. If we have any questions, please, everyone, please feel free to type it in the comments. If you don't have the questions now, but you might have questions at some point in the future, please feel free to send us those questions as well, so that we can address them. And if the ones that we can't address, we'll send it to Mr. Shoguro and then send you back what he says in responses. The idea is for everyone to understand how this thing is rolling out and for everyone to be able to prepare themselves for all the different responsibilities that's expected of every single citizen with these new tax laws, and also how to protect yourself here. It's not just about paying the taxes. Maybe there are also some loopholes that you can hide under to make sure that you're not paying more than you need to. All of those are also conversations that can be had if you have specific questions or questions that are very, very specific to your context. We're happy to take some of those, whether now or after now. We're happy to take them and respond to them. If you need to be connected, if you have a business and you need to be connected directly to Fovis, you want them to take you on as a client so that they can help with your taxes and audits and stuff like that, we're also happy to make those introductions. So please reach out to us or to me personally. My email is olumide.akinshola@namiri.tech, or the phone number that we have out. Just call anyone and mention that you're on the webinar and you need XYZ, and we'll be sure to make sure that we put you in touch with the right people or provide the right clarity that you might require. So thank you very much. I don't see any questions in the comments section, and I know that we are way out of time. So my own presentation, I will only do maybe 2 or 3 slides of the entire thing, because I know that we've gone outside of the time that we had allocated for this particular engagement. But I also wanted to just provide some clarity regarding what we do specifically as a company. Beyond trying to educate people so that they take advantage or they also position themselves properly for the new tax laws, we are also in the business of helping companies do their e-invoicing. The FRS now has decided that every time you generate an invoice as a business, you need to send that invoice to them for them to validate and sign before or after real time or near real time. Please confirm that you can see my screen if you can. Can everyone see my screen? Excellent. Okay. So the FRS has decided that they want to use technology to streamline tax compliance. So they've built a platform. They've licensed a bunch of companies to connect to that platform. One of those companies is Namiri Technology or Digitax, which is us. And then they have now mandated us to go and connect other taxpayers' platforms, ERPs, etc., to that platform so that when invoices are generated, the taxpayers have a way either of transmitting it in real time or after the fact to the MBS platform. So evidence of that transmission then is that the invoices are now affixed with an IRN, which is an invoice reference number, and also a unique QR code on each of those invoices. So we are one of those service providers. The first rollout is to companies that are doing an annual turnover of 5 billion and above. So if your company is in that cohort or you work at a company that's in that cohort, please let's have a conversation. We're happy to come and do some demos and also to provide some clarity around the e-invoicing policy so that you can be compliant. The deadline for those cohorts of companies was November 1st. I think that the FIS just decided that maybe from January 1st, they will start thinking about doing a lot of enforcement. And the enforcement is not something that's complicated. They will just look at their records and see who is not yet transmitting invoices and put a penalty on their tax pro max. They're not going to come and look for you. They don't need to leave their offices before they apply punitive measures to companies that are not compliant. So who are we? We are called Namiri Technology. Also Digitax. Digitax is actually the product. Namiri Technology is the company, but everybody knows us in the market as Digitax. We have been licensed as both a system integrator and an access point provider by the FRS, now NRS. Some of the things that we do, of course, is that we've been doing this business for the past 3 or so years. There's nobody else who has this license or either of these licenses who has the experience that we have specifically in e-invoicing. Nobody else has done e-invoicing before. As a measure of tax compliance, we are the only ones who have done it before, and we are expanding into Nigeria from Kenya and Zambia, and also expanding to other places after Nigeria to sort of also take the gospel of e-invoicing across Africa. We do have some global partners who are working with us now to onboard their clients so that their clients can be compliant. You should also take that advantage for your business. And part of our products, key features of our API is that it supports 20 different integration programming languages. We have the ability to queue and scale. So if your invoice was, if you were doing 10 invoices last month, for instance, and you suddenly have a need next month to do 100,000, we can quickly support that so that nothing is lacking. And also, of course, the asynchronous functionality that automatically retries the FRS. This mitigates against duplication of invoices. We also have that capacity. We know that sometimes the regulator platform could be down, and then when you send an invoice to it while it is down, that whole mix-up can ensure that you are sending one invoice multiple times. And so we have built a feature that only allows you to send the invoice one time. We'll take that invoice from you, and we'll continue to retry the FRS until we get a response and send that response back to you. So that means that you are not going to be paying more VAT than you should. And then you don't necessarily incur all the unnecessary tax obligations that come with multiple sending of those invoices. We also have a dashboard that functions as an ERP by itself. So if you are actually a small business owner or something like that and you want to use our dashboard, you can speak to us now. If you don't have an ERP, the dashboard automatically transmits invoices and also keeps those invoices for you on the dashboard itself. You log in using your email after you've created an account. You can generate invoices, you can transmit those invoices, you can even bulk upload invoices and stuff, all of that stuff like that. So please reach out to us if your company is in this cohort so that we can think about or talk about how to set you up. These are some of the organizations that we currently work with in Nigeria right now as we speak. We work with Facebook in Nigeria, we work with Godrej, we work with Pepsi in Nigeria, we work with Pompey, we work with Paystack, we work with Glovo, Promasidor, and Copa Schneider. Bristol Helicopters are also one of our clients. Deloitte, the company, are also one of our clients. We're working with some of these guys to make sure that we sort out all their e-invoicing needs. Of course, we offer two implementation options. One is the dashboard that I spoke about, and then the second is a direct connection to your ERP. So if your company, I will stop here because of time. If your company is one of those guys who need to be compliant, please speak to us so that we are able to get you set up quickly on this. Yes, I see a question that says that they would learn to know how our dashboard works. So our dashboard is a cloud-based ERP that is available at digitax.tech. Right now, you can go to digitax.tech. Let me type the link in the comments, digitax.tech. So you go to digitax.tech. You can sign up using your email address, and then you log into the dashboard, and you create a profile, create a business by adding the tax identification number. All of these things take less than 2 minutes. And then by that time, you're ready to start transmitting invoices, at least in the test environment. And then when you've tested it and you know how it works, then you can go live and start transmitting directly to the FRS platform. So please speak to us. We're happy to come and do a demo of the product for you, and also to run through the rest of the implications of getting set up on the Digitax dashboard. Please reach out to me. I'm putting my email address in the comment section as well right now. So please reach out to me, send me an email. Let's have a conversation about how we can get your company set up. So thank you very much. I don't know if anybody has any further questions or if anyone on my team has something else that they want to add, but please allow me to say a very, very big thank you to Mr. Ajibola Shogunro for taking the time today. Thank you very much, sir. We are very, very honored to have you in our midst. So thank you so very much for taking the time. We hope that this partnership continues to grow, and that we can create value for both your business and ours as we walk through the rollouts with the FRS and the regulators on this, and also the business side of things on this new tax administration rollout. Thank you so very much, sir. I'm really, really very honored. Thank you for heeding our call when we asked. So thank you very much. All right. I don't see any further questions, and I see that we do not have that much time. So please reach out to us again, and then we'll be sure to make sure that you are properly set up and you're properly compliant with this new, both the e-invoicing and also generally the tax laws. If you want introductions to Forbes Mazars, they're actually the biggest or one of the biggest companies in that space that do a lot of audits and tax consulting and all of these other things for big companies. Some of their clientele are companies that you know that are huge and big. So if you're working, if you want us to introduce you to them, maybe you want them to work with your company one way or another with this new invoicing rollout, please email me. My email is in the questions in the comment section, and then I'll make the connection, and then hopefully they can bring you on as clients and provide those services to your organization as well. Thank you so very much. I have to say that this has been very illuminating even for me, even as a player in that space. There are certain things that I didn't know about the rollout as a whole that I have now learned today. So thank you very much, Mr. Shogunro. Thank you everyone as well for taking the time to work with us. Thank you to everyone who's here, who has stayed through this and who has learned a thing or two. We hope that you have learned a thing or two, and we hope that you will continue to keep in touch with the rest of the webinars that we'll have over the next couple of months, where we'll discuss different aspects of the whole taxation and new tax policy rollouts as well. Thanks a lot very much. I still don't see any further questions in the comment section, so I think that we can bring this webinar to a close today. Have a great day, everyone. Thank you so very much for joining us. We really appreciate, and we hope to hear from you soon. Thank you, Mr. Shogunro. Thank you very much for taking the time again. Have a great day, everyone. Thank you.
You too. Thank you. Bye.
Bye, everyone.